Hello and welcome to today's video on how to improve your credit score. Your credit score is a crucial aspect of your financial well-being, as it can impact your ability to get approved for loans, credit cards, and even apartment rentals. A good credit score can help you save money on interest rates and insurance premiums, while a poor credit score can cost you thousands of dollars over the course of your lifetime. By the end of this video, you'll have a clear roadmap for improving your credit score and taking control of your financial future. First things first, it's important to understand what your credit score is and how it's calculated. Your credit score is calculated based on several factors, including payment history. This is the most important factor, making up 35% of your credit score. Credit utilization. This makes up 30% of your credit score and refers to the amount of credit you are using compared to the amount of credit available to you. Length of credit history. This accounts for 15% of your credit score and looks at how long you have had credit accounts open. Types of credit used. This accounts for 10% of your credit score and looks at the variety of credit accounts you have, such as credit cards, loans, and mortgages. New credit. This accounts for the final 10% of your credit score and looks at how many new credit accounts you have opened recently. Before you can start working on improving your credit score, you need to know where you stand by checking your credit report. There are three major credit bureaus, Equifax, Experian, and TransUnion, and each of them is required to provide you with a free credit report once a year. You can request your free credit report at annualcreditreport.com. When you review your credit report, carefully check for errors or discrepancies, such as accounts that do not belong to you, incorrect balances, or incorrect personal information. If you find any errors, you should dispute them with the credit bureau as soon as possible. The credit bureau has 30 days to investigate the dispute and respond to you with the results. If the error is corrected, the credit bureau will provide you with an updated credit report. Regularly reviewing your credit report and ensuring that all the information is accurate can help you identify potential areas of improvement in your credit score and avoid any negative impacts on your credit due to errors or inaccuracies. One of the most important factors in determining your credit score is your payment history. Late payments, collections, and bankruptcies can all have a negative impact on your score. To improve your credit score, it's essential that you pay your bills on time. Set up automatic payments or reminders to ensure that you don't miss any payments. Another important factor in your credit score is your credit utilization. Credit utilization is the amount of credit you use compared to the total amount of credit you have available. It is a significant factor that affects your credit score. Credit scoring models typically consider both your overall credit utilization and the utilization rates of each individual credit account you have. Maintaining low credit utilization rates can help improve your credit score, while high utilization rates can lower it. Ideally, you should aim to keep your credit utilization under 30% of your available credit limit. One way to improve your credit utilization is to pay down your outstanding balances. If you have high credit card balances, consider paying them off as soon as possible or transferring the balance to a card with a lower interest rate. Another strategy is to ask for a credit limit increase. This can help increase your available credit limit, making it easier to keep your credit utilization rate lower. Building your credit history is essential to building your credit score, as it shows lenders that you have a track record of being responsible with credit. Here are some ways to build your credit history. Open a credit account. If you don't already have a credit account, consider opening one. Make sure to use your credit card responsibly by paying your bills on time and keeping your balances low. Become an authorized user. If someone you know has good credit, they can add you as an authorized user to their credit account. Take out a loan. Another way to build your credit history is by taking out a loan. This can be a personal loan, a car loan, or a student loan. Keep your accounts open. Once you have credit accounts, keep them open for as long as possible. The length of your credit history is an important factor in your credit score. By building a solid credit history, you will be on your way to improving your credit score and increasing your chances of being approved for credit in the future. Diversifying your credit is an important aspect of building a strong credit profile. It involves having different types of credit accounts, such as a mix of revolving credit accounts like credit cards and installment loans like a car loan or mortgage. One way to start diversifying your credit is by applying for a secured credit card. A secured credit card requires a deposit that serves as collateral for your credit limit. This can be a good option for those who are just starting to build credit or have a limited credit history. Another way to diversify your credit is by taking out a small personal loan. Make sure to shop around for the best interest rate and terms before taking out a personal loan. As you make your payments on time, the lender reports your activity to the credit bureaus, helping to improve your credit score. Finally, if you have a good relationship with your bank or credit union, you can ask if they offer a credit building program or loan. Remember, the key to diversifying your credit is to have a mix of different types of credit accounts that you can manage responsibly. It's important to make your payments on time and keep your credit utilization low to ensure that your credit score continues to improve over time. Once you've taken steps to build and improve your credit score, it's important to monitor your credit report regularly. One way to monitor your credit is to sign up for a credit monitoring service. These services typically provide you with alerts when there are changes to your credit report, such as a new account or a missed payment. Many credit card companies and banks offer these services to their customers, and there are also free websites and apps available, such as Credit Karma, Credit Sesame, and Experian, to name a few. These are free to join, and I suggest you get all of them. They are similar but not the same. By monitoring your credit score regularly, you can catch any issues early and take steps to address them before they have a negative impact on your credit. This can help you maintain a good credit score and achieve your financial goals. Remember, building credit takes time and effort, but with the right strategies and habits, you can achieve a great credit score and financial success. If you have any questions or additional tips on building credit, please leave a comment below. And if you found this video informative, please give it a thumbs up and don't forget to subscribe.